And Keir Starmer's Labour government announced the budget less than 4 months after winning the snap elections, and financial markets have been on a wild ride since the budget announcement. Big tax rises are coming, but not as quickly as big spending increases and the prospect of higher growth as investors lead to curtail the expectations of Bank of England's rate cuts. UK Chancellor Rachel Reeves delivered the new Labour government's first budget, and if she was hoping for a smooth reception in the financial markets, so far it's been anything but that. The government's plans for massive borrowing and fiscal stimulus have over the next few years pushed UK bonds lower. The deep sell-off in UK bonds extended on Thursday. The scale of the latest market moves don't compare with the fallout from Liz Truss's plan for unfunded tax cuts 2 years ago. However, they do underscore the tightrope Reeves must walk to keep the market on her side. UK bond yields did initially dip as the Chancellor was speaking. Initially, markets liked Reeves' confirmation that tax rises would raise £40 billion or about 1.5% of GDP per year. That's a big number by any comparison and is much more than Labour promised to raise during the general election. But no sooner had the Chancellor ended her speech did the tide quickly begin to turn. Now that the full details are available, what immediately stands out is just how much borrowing is projected to rise over the next few years. The reason? Tax rises may be coming through gradually, but the corresponding rise in spending does not. With tax rises not initially expected to match higher spending, it's this stimulus effect that investors seem to have really latched onto. Financial markets no longer expect the BOE to cut rates as aggressively. Now they expect interest rates to land a little closer to 4% than had been priced just a few hours before Reeves' budget. According to a Bloomberg report, Evelyn Gomez, Lectie strategist at Mizuho International, said, and I'm quoting here, market participants have had time to reflect, and I think they're still worried about how inflationary the budget may be, how loose it is, and how much it can change the BOE's reaction in cutting rates. For latest news, download the WION app and subscribe to our YouTube channel.